Hi, welcome to Chart Chatter with Chatur Charts, the 13th June 2022 edition. Pursuant to our analysis on Friday, that is the 10th June 2022, of spotting the harmonic Gartley pattern and the harmonic butterfly pattern in Nifty and Bank Nifty, with eventual targets of 15,800 and about 33,000 on Bank Nifty. This morning, the markets played out exactly on those lines, and the complete target for the harmonic Gartley pattern in case of Nifty was achieved, with Nifty plummeting to say 15,690 levels to test the 7th May low number, and Bank Nifty just shy short of the 33,000 that we had kind of targeted. But that is not very far off, and eventually it could test and go beyond beyond 33,000 as well. So the harmonic bearish patterns have played out. Now, next, what is the major question in everybody's mind? And with the US markets also dwindling down, it's going to be a mega worry for many of the traders and investors of what could happen to the Indian markets. So we try to dig deeper, and here is what our findings are. So this is the Nifty chart, and what can be seen is that today this is the candle, the candle with which Nifty plummeted and closed at 15,774. It also tested a low of 15,684. While doing so, from the previous close of 16,201, it has again created a gap. So time and again, we have seen that indices tend to come and fill up their gaps fast in any direction. So possibility does exist that in the next few sessions, Nifty might make a kind of dash to close this gap. And this gap, in our opinion, should be used to kind of cut the long positions and move out of this market in terms of long positions. That is my understanding. However, then people can differ with that. So the reason why I feel that this should be used to move out of long positions is because that if we look at the overall day chart of Nifty minus all the major kind of patterns, etc., that we had drawn over a long period, we see that Nifty has actually formed Elliot triple combo wave correction. Now, this is a very complex correction, a combination of about 11 swings, and so this is actually a sideways correction. The reason why it's called a sideways correction is that way back in October of 2021, Nifty made a high of 18,000, above 18,000. It revisited that same high somewhere around January of 2022. And again on April of 2022. So 3 times it went past 18,000, could not go past it. It went nearly to beyond 18,000, but did not go above the previous high of 18,600, and thereby made swing highs and swing lows. So the pattern per se, based on the Elliot triple combo wave rules and the guidelines, is now into the last lap. So it terminates at point Z, which is right down here. And that is because the trend line has been joined using the W dot and the Y dot. And on top, we have joined the X and X dots. So based on this triple combo correction, eventually, if this combination or this correction plays out, Nifty might test 15,000 or even lower. So that is the eventual target. But is this something that is going to happen very soon? We don't know. These waves have to unfold over a period, and then only we can validate these waves. So, but for now, it appears that as an immediate measure, Nifty might attempt to close this gap first. So it is ideal to cut out on long positions because there's extreme bearishness everywhere. Globally, there's everywhere. It makes common sense. The US markets are kind of melting. The bond yields are going up. US Fed is bound to raise rates. RBI has already raised rates now, and it's felt that the next round of also it's going to be a rate hike. So with all these background, it makes even sense to move out of the markets and close long positions, if any, and then wait for good entries to start buying again. So with that view in mind, one could look to close out positions in case Nifty retests 16,000, It's a possibility that it could test over the next few days to few weeks. So that could be used, but eventual target looks like it might test 14,900, 15,000, and the next course of action after that could be determined only after that. So let's wait and see as to what's going to play out. And so if Nifty is going to kind of move down, Bank Nifty is not going to be left out. So let's quickly examine what Bank Nifty has in store for us. So this is the Bank Nifty chart. A similar kind of approach has been used. This also appears to be in the Elliot Combo Wave correction. And based on, again, the same analysis, it also appears to be in the last wave 5 of wave C of Z. So this is the Z bar from X to Z. And this is the wave 5 of Z. So, and this wave 5 of this ABC correction, which started at X and went down here till about 34,000 level, and again 36,000 level. And thereafter, this is the C correction. So this C correction eventually could take it to 31,500. So that's a possibility. So let's see how it unfolds. Similar to Nifty, even Bank Nifty has kind of created a gap here, and which also can be used to cut down on all long positions, if any. So markets are in a very, very grim situation, and we will have to really wait to see as to how it unfolds. And so let's try and check it out as to whether the analysis of whether this is an Elliott Combo Wave correction turns out to be true or not. Until then, all of you have a nice evening and take care. Bye-bye.